Hello, my name is Susan Rizzo, and I am your Albany County Comptroller. I'm here to address the fiscal condition of Albany County. As a newly elected Comptroller, I bring the tradition of speaking annually about the previous year-end results and about the accomplishments to date for the current fiscal year. This being my first year, I would also speak about my transition in taking a position previously occupied by the same individual for 24 years. I will be discussing the year-end 2019 financial results, the transition, and 2020 progress looking forward. I knew I wanted to hit the ground running in January, so I started to prepare for my transition immediately in the summer of 2019. Let's start with the 2019 financial results. I realized that there were a couple people in very important accounting positions in my office who were leaving, and I would need to begin working on succession plans for those positions to ensure financial reporting could continue seamlessly during my transition. I was fortunate to find a qualified individual and arranged to bring him on as a chief accountant during my first 2 weeks. The New York State Annual Financial Report is due in April. The Annual Financial Report, referred to as the AUD or the AFR, is a report that should not be late in filing to New York State. It was filed on time. The 2019 revised budget was $730 million. The actual expenses totaled $689 million, with a slight deficit of $100,000. The general fund revenue was up $5.3 million, but the expenses were up $15 million. There was a general fund surplus of approximately $250,000. Revenue highlights year over year included the tax revenue for 2019 was up $12.9 million. Expenses highlight year over year include the sales tax distribution to the municipalities was up $5.1 million. The 2019 fund balance is $68.9 million. The debt reserve is $17 million, up $2.2 million due to a refunding and a premium on bond issuance. The results for 2019 had several positive factors. There was a slight increase in fund balance, a refinance of over $36 million in debt, sales tax increase of 4% over $10 million, property tax increase of another $2 million. Negative factors were total expenses grew by 3%, or approximately $15 million, largely due to legal services for the indigent due to the New York State mandate, an increase in employees' salaries and benefits, and increased debt service payments. I would like to point out in 2019, the debt increased by $48.2 million to $332 million, a 17% increase, largely due to the TU and nursing facility renovations. Next, I would like to speak more about the transition as the new controller as well as 2020 progress. Additional efficiencies have been implemented in streamlining processes and procedures. I hired experienced, qualified individuals. I increased training and continued education. I improved data analysis. Process improvements, increased use of direct deposit for county payroll, eliminated over 50 bank accounts to reduce bank service charges, instituted monthly bank account reconciliations, implemented accounting software programs and training, initiated a utility expense analysis, and increased analysis for invoicing, banking, and capital. Next, I would like to highlight the completed time and attendance audit. I was left with a preliminary time and attendance audit that was previously worked on for 18 months that was never completed. The previous controller hired outside counsel and an accounting firm and incurred over $200,000 without legislative approvals. Work papers did not indicate that sampling and testing were performed. Department head interviews never took place to confirm potential issues. Report issued did not present any conclusions. My team finalized and reported a complete audit. I hired a qualified, certified internal auditor to complete the job. Her findings were as follows. Out-of-title pay should be temporary positions, not permanent positions. Payroll liaisons need to improve internal controls. Supervisors need to sign off on time cards prepared by employees. This prompted legislature to update policy. I will be meeting with the legislators to discuss further. 2020 progress. Standard & Poor's reaffirmed the county's AA stable rating. This was due to county financials and the team of professionals in my office. We maximized the return on the county's investment by investing over $130 million in treasuries at a higher rate than just lower money market rates. We analyzed approximately $100 million in unspent capital project funds, which resulted in approximately $20 million to be transferred to debt reserve, increasing the reserve. Another reason S&P valued the stability of the county's financials. In the midst of my transition as a new comptroller, COVID-19 hit the county in March, a pandemic, having a substantial negative effect on the county financials. Actual sales tax revenue, which accounts for 50% of the county's 2019 revenues, will significantly decline in 2020. Hotel occupancy tax, although only 1% of 2019 revenues, will also significantly decline in 2020. There is also an uncertainty of state and federal revenue. The county is incurring unanticipated COVID-19 related expenses, some of which may be reimbursable from FEMA or other federally government funding eventually. We have currently incurred approximately $789,000 in COVID-19 expenses. I would like to speak to some 2020 remedies regarding our shortfalls. We refinanced $7.2 million of 2012 bonds, and the county will save over $1 million in interest expense. We closed capital accounts, transferring $20 million to debt reserve. We continue to maximize our return on investment, increasing 2020 interest by approximately $250,000 annualized. We currently have approximately $69 million in general fund balance. To give you an idea of how general fund balance works, our cash balance fluctuates and it gives the county available cash to pay its bills. The cash was down as low as $2.6 million in January, and it gets replenished when the sales tax revenue comes in. But since sales tax projections are declining, as you can see from the attached chart, our cash flow is projected to be negative in October, November, and December. To help mitigate the negative cash flow, the county executive has asked departments to control expenses by 20%. The chart doesn't take into consideration the $20 million the Comptroller's Office increased the debt reserve, the refinancing of their increase in interest income, sales tax update. Our sales tax is down $4.6 million through April. We won't be getting this money back. We just got an update of our sales tax numbers this week. We are now down $6.7 million. And there's further delay in our receipt of sales tax due to the governor's executive order. Goals. We continue to reorganize the Comptroller's Office staffing. We hired a chief accountant, a chief auditor, and chief of staff. We increased training and certifications. We're bringing the county into the 21st century. The goal is to have 100% payroll, direct deposit. Goal is to switch from weekly to bi-weekly payroll. Consolidate utility, invoicing, and payments, just to name a few. To summarize, Albany County is in a strong financial position. Despite the recent turmoil related to COVID-19, we need to continue responsible borrowing, maximize on a return on investment, and cash flow management will keep the county's finances on the right track. Continued cooperation and communication between the Comptroller's Office and other departments will lead to sustained progress and financial improvements. Thank you.